So you reached out on X. You listen to the podcast. Now we're co-hosting Autonomy Markets together. This is fun. You're going to give the Wall Street perspective. I'm going to give the Autonomy Insider perspective. What's Wall Street thinking about autonomy? We're starting to see an uptick in research reports, but on the ground, what is it really thinking? Because we know a lot of those reports are bought and paid for.
Grayson, I was going to say no comment on that, but yeah, no, we will comment on the bought and paid for situations that occur. That's so good. And Grayson, through me, you will be now educating Wall Street and your listeners and your many guests, your many esteemed guests within the autonomy universe to better educate Wall Street about the future of autonomy. What's your tagline again? The future is bright. The future is now. The future is coming.
The future is autonomous. The future is bright. The future is autonomous. That's the tagline. It's coming because I'll sit here and I say to my wife, and I'll rant and rave, and I'll turn on Bloomberg or CNBC, which, to be very honest, is unwatchable most of the time. I like when your partner Rich is on; he does a fantastic job of media, and when you're on telco, but otherwise, it's unwatchable. And I got to tell you, the best thing about CNBC is the individual that created the inverse Kramer ETF. That's an all-time epic one.
I don't think that's performed all too well, but I hear you, and just trust me, there are many people on Wall Street that are just as frustrated with some of the things that are said on CNBC or even on earnings calls. I get them. My Bloomberg lights up all the time. It's like, can you believe the moronic question that person just asked on the call? And we try and reflect that sometimes in our notes. And we have an earnings scorecard that we call out when analysts get on there and say, "Great quarter, guys. It's been wonderful." So hopefully we'll do that on this podcast and also try and address some of the Wall Street stuff that's out there on autonomy. And hopefully you can correct me. And by the way, to your listeners, I'm a little bit of a skeptic on things. So I know, Grayson, you're a super positive guy. I think that's great. And I do believe in autonomy in the long term. But when I say something moronic, which is inevitable, please provide me with that feedback. I will gladly correct myself if I say something moronic in the upcoming episodes.
I'll correct the record, but I promise you one thing. I won't give you an applause if you say "great quarter, guys."
Exactly.
I can't do that because I watch this unbearably watchable news, and it seems every day now there's an individual on one of these programs, Bloomberg or CNBC, talking about autonomous vehicles, and they're factually incorrect. Where are they getting this information? How are they getting on TV and spewing this stuff that is just so factually incorrect? One of them was on there, said short Uber, the company's going under. They don't have anything to do with autonomy. And you and I both know Dara Khosrowshahi's running a masterclass on autonomy right now. We got this person's on there saying short, and then you got the other guy downtown, Josh Brown, saying go long. There's no cohesion. It just seems that there's no true understanding of autonomy in markets on these major financial programs.
I mean, part of this is some of the leading companies, Cruise, Waymo, Zoox, are within larger companies that just don't provide information. So they don't spoon feed the analysts with the information that they need to provide the proper information in terms of autonomy. In the case of Uber, I don't know what the situation is. I think Uber does a great job at communicating. I just maybe think there's some skepticism. But you're right, the Uber one and the fascination with Uber and whether autonomy will kill it or not is clearly been a massive topic for people. But again, it's going to come more to the forefront. If you look at the Uber and the Lyft earnings calls in the last couple of quarters, and maybe it's because Elon is hopefully going to announce something in October, or Google is up to 100,000 rides, or Cruise is making some like these questions are coming in because the investors are like, okay, we didn't believe you, Uber, that you could get to profitability, and then they did it. So we're going to be like, all right, we're still worried that these autonomous options that are out there are ultimately going to kill you because, our view of autonomy is simply, it's just going to lower cost and there's no other potential value, right, to what autonomy brings to the table. And as you and I both know, that's obviously, in the near term at least, kind of a silly assumption.
You could have that assumption years ago, pre-Dara, when they had ATG. That was a complete drain on their finances. Now it becomes a platform. It doesn't seem that Wall Street's valuing the algorithm. Mark Andreessen says that the sub 5-minute pickup, Uber has the routing algorithm. they become a hybrid network where I live, you can't get an autonomous vehicle, but you can get an Uber. For some reason, it takes 15 minutes, sometimes 20 minutes to get an Uber where I live, but you could supplement that with autonomy in certain major metropolitan cities and operate a hybrid network, and then Uber becomes a Visa MasterCard where they get a check, and which was very interesting today. Did you see that GM appointed Alfred Kelly, the CEO and chairman of Visa, to the GM board today? And in the announcing it, they highlighted his customer experience. That's very interesting as they go to revamp Cruise.
Grayson, I just don't think people fully appreciate the challenges. I mean, while we're, again, very bullish about autonomy, the challenges of the timeline in terms of the technological development, but also the regulatory issues and where these products and these cars can exist relative to where Uber is in the market today. And to your point, getting you a car within 5 minutes. Like, are you going to just randomly have a separate app for an autonomous car if it's not going to come to you in 5 minutes? No, of course not. Right. So by definition, Uber, because of its share, and to a lesser extent Lyft, provides the platform for, if you're an Uber, or if you're an autonomous company, obviously you just want to drive more and more rides to get you towards profitability and to improve your own performance of your cars. So that obviously puts Uber in a great position. But on the flip side, and we started to debate this a little bit on Twitter, Grayson, let's put Waymo aside. Let's take Wave, a UK-based company. Let's say they plug into Uber's network, where this is a company that obviously SoftBank's behind them, tons of financing. But if Uber allows them to plug into their great platform and allows them to scale, right, to get to however many rides they need for Wave to be profitable in a given market, then you've created potentially a monster that, like, what happens if Wave uses Chinese cars? They're not paying for, LiDAR sensors. The cost of the car is such that all of a sudden in San Francisco or the Bay Area, they have enough cars that they can get to you within 5 minutes. Then you've enabled someone that would not have necessarily succeeded without Uber to then be a profitable entity that can stand alone separate from Uber. So that is the ultimate, so beyond we agree, the near-term silliness of concerns about autonomy, to Uber, is there not a longer-term enablement of companies that wouldn't necessarily have been able to compete with you by just basically giving them rides to get to profitability?
In theory, you're correct. In practicality, you're wrong, because you're going to have to build the app. You're going to have to get the consumer acceptance with the app, and you're going to have a large enough fleet that you're going to have all the infrastructure on the backside that goes along with it. And building the routing algorithms is not cheap, and it's highly expensive. You and I, if we're out in San Francisco, we don't want to wait 15 minutes for a vehicle. We want to get in the quickest one. I'll give you an example. Last year I was with Harry Campbell, the rideshare guy. We're in Austin, and we're going over to Terry Black's to get barbecue. So Harry being Harry's got to order the Uber. Me being me, I got to order the Cruise. 15 minutes for the Cruise, 25 minutes to get there. Harry's already on his second beer by the time I got there because he took the Uber.
But Grayson, your argument though is that, so first of all, let's agree that the reason it's 15 minutes for Cruise relative to, let's say, 5 minutes for Uber is just the amount of supply that Uber has in terms of their drivers today, right? But your argument that is in X years, let's call it 5, 10, doesn't matter. In the future, when Waymo or Wave or whoever is at scale, Uber's still going to be better because the algo, even if the scale of supply is the same, the algo is so much so that experience is going to be better. And by the way, maybe, but the risk profile is different. And I think in support of what you're saying, I would point to Netflix. Like Netflix would say this all the time. Everyone says it's just easy to create algos or streaming, and look at TikTok. It's just easy to create an algo. You're right. Sometimes Wall Street, on the hard technical stuff, just assumes that anyone can kind of whip it up and it's all going to be the same. Look, the same thing is existing with AI right now, right? I mean, you have a bunch of different, large language models that I think many on Wall Street are saying, like, is it all just going to be commoditized, or are they all doing the same thing? Or maybe there will be one that will be better than the other. So your point, just so we clarify the difference, is that 5 years from now, that algo, which is a separate development, is going to be something that they can't replicate. So my pushback to that, it's Google. So are we arguing that Google and all of their engineers couldn't create a better user experience app than Uber?
Do you remember Google Plus?
I love it. List off all of them. That's fair.
I can go down the rabbit hole with you.
No, I know. No, I have Google Voice right now, which is the one number thing. You're right. They develop things up to a point and then it stops. You're right. That's a great pushback.
Because the engineers are wealthy and then they get lazy when the startups are hungry. So here's the thing for Uber. When do they have their house of cards moment for autonomy, to use the Netflix analogy? What causes that critical moment?
Oh, that's a great point. I mean, it's not going to come for a while, but that's where the not easy money, but that's where the money is made, right? To the extent that Uber stock sells off on this belief that the algo is not differentiated. And by the way, there's going to be other reasons for the consumer to remain on the platform, right? I mean, they're stacking as much stuff, I think, as possible in there for them to leverage incremental revenue. So it's not like you're just leaving just for cars. Like you'd be leaving another ecosystem altogether. I don't know. I mean, I think it's an overhang until it isn't. And I guess when it isn't is maybe when someone does try and do an independent app and then it's a fucking abject failure. Pardon my French.
It could be. So another pushback on the Uber side is all the corporate partnerships. If you talk to individuals in the TLC taxi and limousine business, they'll talk to you about the Uber partnerships with the big corporations. Morgan Stanley has one, JP Morgan has them, they all have the integrations. It's very hard to get those corporate procurement departments to move. If they're already locked in, that's a very big source of revenue.
You're talking your first mover advantage, right? I mean, yes, it's hard. Look, I deal with this with our portfolio companies on the venture side, signing up enterprises. It's a long sales cycle. It takes time. There's a lot of relationships that are built over time that just don't fall away because something new comes along. But you're right. That is all part of the ecosystem of the Uber platform, that will provide them that strength. So yeah, I mean, look, they are the platform to connect you with a ride versus you yourself owning your own car, right? The broader issue here in terms of Uber, whether it's autonomy or otherwise, is if you own 2 or 3 cars, just allocating one of those. I'm not going to own X number of cars. That second or third car is just going to be Uber, or maybe all of my cars be Uber. Like everything goes to rideshare, and then they become the platform because autonomy has further enabled that.
Interesting. You said my car went back. It's an absolute piece of junk, and at some point when this deal is done, I will tell what the company says and roast them on here. But for now, when I was going through the whole process...
Wait a minute. Are you waiting to get your refund check before you roast them? Is that the issue?
Yes. I'm not dumb. I'm financially responsible.
See, I'm an idiot like that. I would roast the company even before I got my money back.
I did have a talk with their CEO, and he's going to get roasted too because everything he said on the phone to me, the opposite came true. But I'm waiting to get my refund, and then I will name names. And so going through this process, do I get a new car? Do I not? And if there was an autonomous vehicle here available where I live, I wouldn't buy a new car. It's not worth it because if you the thing that's going to drive the adoption, and this was in the latest release from the Fed, the stickiness around inflation of car insurance going up. Nobody talks about how much it is value to insure a car. Do you want to have your mind blown? The average insurance, this is bottom of the barrel, 100, 300 minimum to have a lease. This is does not include uninsured motorist. This is the bottom of the barrel legal minimum to have a lease car in the state of Florida. For a Tesla Model 3 with Geico, it is $548 a month. That is more than the lease payment for the Model 3.
I mean, it's insane. Homeowners insurance. I personally have had that issue, but I mean, maybe the insurance analysts are the best ones to cover Uber. But Grayson, you've done an incredible job in terms of talking to a lot of people addressing this insurance issue. Are we certain that when autonomy takes off, because of the consistency and not having a human driver, that the cost to whoever owns that fleet is going to be less on a per car basis than what drivers are paying today?
They're going to self-insure and offer it as a service. And the captives that I spoke to, Hanover Re, Munich Re, Swiss Re, all have appetite for it. It's going to get bundled in. There's no way. Sergey, the CEO of Coop, does a very elegant job of breaking it down. But there is no way to scale if you want to look at personally owned autonomy without bundling the insurance. You're going to have to bundle the insurance with the product. There is no way it's going to scale just based on the current markets that are currently happening. And then you have State Farm pulling out of California, and you're seeing these markets, unless the insurance piece, figure out, autonomy is not going to scale. That's why if you look on the ride share, the robotaxi side, these large corporations have their own captives to reinsure. That's how they're able to do it. But once you get to the personal side, it's not scalable unless the insurance is bundled. Perhaps that's why Tesla's actively in the process of getting an insurance license in all 50 states. They could turn the market upside down.
Well, that's what I was going to ask you. So in Elon's concept of I own my Tesla, now it can be basically, used when I want to lease it out or let it be used for autonomy. In that case, you would guess that I won't own the Tesla. I'll probably lease the Tesla, and the insurance for those autonomous rides, assuming that this ever occurs, will be on Tesla's insurance. That will be part of my lease bundle.
Correct. You're not going to own the vehicle. And I've gotten really nasty. I call them nasty grams, as my daughter would say, from individuals telling me that would they have the right to own it. I'm not saying that's the only model, but it's the only economic model.
Right. I agree.
To make this work. Then the question is, this goes to your world. Who's going to own it? Is a Japanese commercial bank going to own the paper? Who's going to own those assets at the end of the day?
I mean, it can be, first of all, if there's a return available, money will flow to that return. And I've covered the wireless industry forever. Look at what tower REITs are in terms of their caps. American Tower, one of the largest REITs in this country, now international, right? SBAC, Crown Castle, and still a private market for these. That you will find dollars to go after that if it's insurable. The other part of this profit equation is, I think historically many investors have looked at autonomy as the way to reduce costs to improve the margins at Uber. But again, what I think you've covered on your podcast quite well, and I'm just curious on your updated views, why should this not be treated as a premium service as opposed to something that just increases margins, meaning that it's a variable experience. Like McDonald's we have to come up with a better Starbucks. When I go into a Starbucks anywhere around the world, I know what that Piecyk coffee is going to taste like. If I get into a ride with an autonomous vehicle, I know exactly how they're going to drive. The guy's not going to slow down to 10 miles an hour when he's pulling up up to my street. Similarly, he's not going to hit the brake. Whatever the algo says is going to be the experience, and I'm going to get it every time. Shouldn't, as a consumer, you pay more for that?
Yes. See, this is the mentality. Thank you for giving a Wall Street mentality and a true understanding. It goes back to the Forrest Gump line, life is like a box of chocolates, you never know what you're going to get. That's Uber. You have good Ubers, you have bad Ubers. In my case, I've had individuals smoke cigarettes, and I can't stand the smell, and I can complain to Uber, and they gave me my mind to do the right thing. But it's this whole inconsistent experience with UberX, even black, SUV, green, all inconsistent experiences.
Not getting your ride canceled. There's countless times I've been in Midtown Manhattan and want to get back on a busy night, and I get 6 cancels in a row, and you just won't get those cancels.
You won't get the cancels. You get the consistent experience, and you're going to get your environment. It's autonomy. I'll say it again. Is a luxury product. It is a high-end product marketed at a select group of individuals for now. Yes, there's this whole talk of democratization of autonomy. That's not my world. I view autonomy as a luxury product where experiences that you can bundle it on. And I've said this before, and I'm going to say this again. The most profitable division of autonomy will be luxury. And I truly believe one of the largest companies in terms of long-term revenue of autonomy will be LVMH, because they'll be able to vertically integrate experiences.
And by the way, that may be true in the near term, but let's look at it from, again, 10,000 feet. Any disruptor, you start within a segment of the market, you are successful, you get to profitability, and then it broadens from there. So you would think initially, at least, you would price this as a premium product. You don't want the mentality of the consumer to associate autonomy with discount. You want the initial view to be premium. And then look, if at some point down the road you have lower priced options that are enabled because insurance is lower and the cost is lower, the ongoing cost of those cars is lower, then great. How do you think that fits with, Waymo's switch off of the Jaguar to maybe a brand that for the American perception would not be as high a quality? Do you think that's consistent? Can Waymo still be perceived and accomplish what we've just described with a vehicle made in China? I guess all vehicles are made in China, but from China.
Does Waymo even build the Zeekr because of the pending rulings coming out of the Commerce Department?
So you think it's DOA? But let's assume that it does. Let's assume that they can move forward with Zeekr. Is that the right way to go? I mean, it lowers your cost, obviously. But look, the component costs seem to be the larger driving factor. And the Zeekr's not coming with the AI componentry, right? It's just you're just basically buying the car.
You're buying the shell, or if you want to use the term, the skateboard, you're buying a shell. But I actually started looking at some interesting data, and I'm going to source this to Pew. And I started contemplating doing my own polling on this. Would you allow a family member to ride in a Chinese manufactured vehicle? Could you imagine one of their competitors running an ad campaign like that in this political climate?
I mean, Grayson, you and I may agree on that personally, but how many people do I go up to and be like, you're letting your kids on TikTok? And there's certainly no issues with many products. Yeah, I think it could be a perception issue. It might be kind of it could be a self error on Google's part, Waymo's part to go down that route. But maybe we're just wrong in that, like, look, it's just a shell, it's white labeled, and there's going to be so much other stuff that Waymo will wrap into that it'll just be perceived as a Waymo car, and Waymo being an American company.
Yes, but we have an election in November. Trump becomes president again, and Alphabet irritates him over a search. This has happened. He starts hammering home they're putting Chinese cars on the roads of America. You know the bully pulpit's coming. Then you've got a problem.
No, I don't disagree. I think from a trade war standpoint, this one's a little different because it's not like you're not enabling Chinese AI technology or autonomous technology. You're just enabling a car. Under the Biden administration, there's this like, oh, you have these targets to get to certain electrification, and how do you do that without cheap Chinese cars? So there's like that kind of, tug that exists. Look, there should be, I think, national interest in making sure that the EV industry is protected outside of China, which might be subsidizing or is likely subsidizing a lot of these potential competitors. So I think on the autonomous or AI angle, which seems to be the primary focus of government under both administrations, probably not as much of a risk. But I think on the EV side, maybe under Kamala, that's a little harder for China to come in, and maybe under Trump, it might be a bit easier because he just doesn't care about the EV stuff, the priorities and the goals in the first place. Does that make sense?
It makes a lot of sense, but I'll give you pushback and look at it. So there's photos, and Waymo went on the record and actually verified them on X, of hundreds of JLRs to get upfitted by Magna outside of Phoenix. So they're ramping them up. If you look at some of the various unverified reports, we're looking at over 1,000 new JLR I-Paces coming online because they're being discontinued on December 31st. What if Waymo designed a car, had it built by Magna? Magna was rumored to be building whatever Apple was doing. That was the rumor. Magna has the expertise to build. They're a Canadian-based company. Why not cut a deal with Magna and build something that you can own and eliminate this potential headache? Because it's a potential. To me, it's an unforced error.
Right. That was the word I was struggling to come up with in my brain before. It's an unforced error. Look, and like I said, how I led into this, I think it's an unforced error just because why wouldn't you not want the perception of autonomy to be high quality, and that certainly threatens it, notwithstanding the China issues that have existed for quite some time. And then at the end of the day, like, Waymo's success or ability to be profitable is not going to hinge on the cost of the underlying shell car. There's certainly plenty of options. So yeah, it just feels like good. So maybe they should just rip the Band-Aid off and try and make that switch. What do you think those switching costs in terms of timeline or otherwise would be? Or is it not really anything because it hasn't really kicked in?
We don't know the cost. We don't have the numbers, but what we have is the press release. And if you notice, 12 times in that release, they talked about cutting costs and various different analogies of cutting costs. That, to me, was a very big sign. If Waymo's out there putting out an Alphabet-approved press release about cutting costs and moving towards becoming a business, they're turning the page, which raises the question to you, when do we... So Sundar mentioned Waymo 2 times on the last earnings call. When do we start to see some transparency outside of rides around revenue that analysts like yourself can start to create benchmarks and really try and get a true valuation of Waymo?
I mean, I think Dara answers this from Uber, answers this question the best, which is like, it's got to be $1 billion revenue business, right? So, for 100,000 rides and $15 a ride, and I think that gets you to whatever it is, let's call it 100 million in revenue. You need to be on that path to 10x that, right? Within, let's call it 2 years. So if you've got visibility towards $1 billion run rate, top line, then I think you start to provide more tangible numbers around it. But then again, if you're getting to that point, aren't you also maybe thinking about spinning this thing out as a separate entity, or do you always just keep it in-house? I mean, you would argue, just based on what I've heard, maybe you can correct me, keep it in because there's so many things to leverage in terms of YouTube and all the stuff in car. You could still do that as a partnership. There could be some regulatory issues around that. But to get to the answer, though, I think you need to have visibility within 2 years to $1 billion in revenue. There it is. I'm going to draw the line in the sand. Maybe it'll be like, was it Bugs Bunny where he draws the line and then moves the line? Elmer Fudd. I'll be Elmer Fudd. $500 million.
I'm going to get you, you silly rabbit. I'm going to get you. I like the $1 billion line. Waymo in 2 years is not going to hit $1 billion in revenue. They've made some outlandish projections.
Right. So that's why they're not talking about why they're not talking about data now, right?
But the co-CEO was out there at a conference, and this was reported by TechCrunch and various other outlets saying LA is going to be $1 billion market. I pushed back at her on X, and I reached out to the IR team. How do you achieve this? Crickets. You can't. If you're a publicly traded company, independent, you can't make a statement like that without backing it up.
Well, I don't know. There's plenty of publicly traded companies that make a lot of statements that aren't backed up. But I think that at some point you provide milestones that people can measure you against. But again, it gets back to, if I'm Google, like, I can say anything. It doesn't matter. Like I'll give you another analogy. Cable, in the old days, if you covered a cable stock, investors hated anything CapEx related, right? So, if CapEx went up, stocks went down. And then they did this wireless deal with Verizon. It wasn't going to be CapEx, but they're going to be an MVNO. But then the MVNO started losing money because you got to give people free phones and there's costs associated with it. You have to get some level of scale. And we started tracking the amount of money Comcast, for example, was losing on their MVNO. Not small, billions lost. And at that point, investors didn't care. There was just larger issues, even within Comcast, that they were looking at. And this one was, on a relative basis, much bigger compared to what Waymo and the impact that they're having on Google. If your investors are going to give you a pass, then why bother giving them something unless it's going to be a milestone that they're going to get really excited about, or you're getting them hyped, for a spin out. Other way to look at this, Grayson, in sports terms, is when you're generally winning, people don't ask questions about some of the stuff that might be, gnawing away, in this case, at free cash flow. And maybe that's also the issue. If the company wasn't winning or doing very well in their core business, then they'll be like, well, why the hell are you doing all this other stuff? And, we need more details on this, that, and the other thing. I mean, I've been told by cable companies that, look, there's so much focus on the number of broadband customers that we add, and there's so much pressure on us now, we have to keep reporting. But at some point when things are going well, we're just going to stop reporting the net adds because the broadband market is saturated, and why give someone information that they can use against us? They can't necessarily do it now because they're not, as based on my analogy from before, winning. When you're winning, you don't really have to provide information. When you're losing, there's more pressure on the CFO and the CEO to present more information to investors.
That raises the whole thing when Phil Jackson was the president of the Knicks and they lost Steve Kerr to the Warriors, and the Warriors kept winning and winning and the Knicks kept losing and losing. It was all these questions: what happened? But yet the Warriors weren't getting those questions. If you look at Saban and Tuscaloosa, when he was winning, the questions don't come. But then when he had the hiccups, oh boy, did the questions come.
Look, I'm an Eagles fan representing NFL season starting this week. Thank God. Favorite sport, best sport in the world, best media asset in the world. When we won the Super Bowl, no one's asking questions. The year after, you lose a couple of games, all of a sudden there's turmoil in the locker room, and Terrell Owens is doing sit-ups in his front in his driveway. So yeah, I think that's the issue. And look, it's also, again, relatively small.
Okay, so football season. Here's a question. Here's a hypothetical for you. Let's say you don't have Sunday ticket. You're out of the Philadelphia market, and Waymo had it streaming in the Waymo. Would you go ride around in a Waymo to watch the game?
Oh God, I would drive that car. I would get that Waymo. Not just for the Eagles. Have a Waymo with all of the screens set up. I just have it drive around. Look, since it's autonomous driving, we could have a keg back there as well. Yeah, it'd be great, obviously. Look, I mean, years ago when Uber came public, I was at it. We were not an independent firm as we are now, and autonomy was a big part of our initial recommendation for that company, and it just obviously didn't materialize. And there's a lot of the stuff, you've gone through this cycle of like hype and maybe disappointment. There's a lot of stuff that we as an investment community have forgotten about that autonomy unlocks in terms of not just what we talked about, quality of rides, safety of rides, lower insurance, but just all the other business models and things that can change. I mean, it's going to be an exciting time, Grayson. Between this and AI, the pace of technological change over the next 5 to 10 years is just an exciting time to be around.
It's an exciting time. Getting back to Uber, are analysts in the street giving them any credit for the monopoly? And that's a bad word, but they're building it in autonomous trucking with Uber Freight, where they're cutting deals with everybody and all the capacity that they're securing?
Freight is considered a negative for Uber. 100% is considered a negative, and frankly, Uber kind of paints it that way, and it's always kind of apologizing for where they are with freight right now. How do you think that plays out? I mean, I know on your podcast you've had a lot of different independent companies that seem to be doing very well, focused on profitability. I mean, look, if freight is something that could turn the corner, that's one of those things that's like an incremental catalyst, something that could help the stock additionally, because it's just not considered to be any value. If anything, detracting value for Uber at the moment. In fact, if Uber decided that they were going to exit the freight business, the stock would probably go up. How do you react to that?
There was a Bloomberg report last year that they were going to spin freight out. It doesn't surprise me. Yes, it's very expensive, but a couple things have changed. One, we had a new CEO announced for Daimler Truck Global yesterday, which is really interesting. I've been texting a lot of sources. Martin Dow is supposed to resign March 1st, not October 1st. I'm trying to figure out what sped that up. One source on the inside told me it was leaked to the IR community and they liked it, so they accelerated. I'm not verifying that. I'm not saying that, but I find that very interesting because she is apparently pro-autonomy. It could bring a lot of changes. Does she continue to fund Torque? Does she cut bait with Torque? Because Daimler, from a freight side, has the only chassis to enable true autonomous trucking, the dual redundant Cascadia, which is going to become a gold mine for them. And then if you look at the overall market of autonomy, Kodiak is very strategically gone into defense. They've gone into off-road with Atlas Energy, which I've seen some of the numbers are going to be highly profitable for them. And then we have the big metric, which I'll ask you. Aurora has publicly stated in multiple earnings calls and multiple releases, they're going to go drive route by the end of the year. If they do achieve that, that is a major milestone for the entire autonomous trucking industry. And the freight is going to be carried as Uber Freight from the Uber Freight network. If they do not go drive route, does the market go into a massive sell-off, or do they just say this is another missed milestone?
I think at this point, while autonomy has appeared on many public earnings calls, and why you have people like myself more trying to get back involved and scratching the surface, there's still generally a negative view. So I don't. If anything, I would guess that there's almost probably an expectation, right, of delays in these things. And I don't think that would create a negative concern. But, I mean, freight's a frustrating one. I mean, if you go back to during the IPO days, like freight was one of the kind of the low-hanging fruits that everyone thought Uber would be particularly situated to benefit from, which just has not followed through as I hope. Luckily, obviously, Rides has done much better than I think people expected and gotten to profitability, which was unexpected for many years.
So on the side of Uber, they have the Eats business, and you're starting to see data, and I do it now. I don't want to pay the delivery fees anymore, so I'll go drive and pick it up, and you're seeing various other data points where that's becoming a concern. How much of the concern is that if we do go into an economic slowdown, the tipping and the delivery fees that consumers opt to drive to the restaurant to pick it up and to avoid paying those fees?
Undeniable, right? If we're in economic recession, then that has to impact discretionary services like that. Although Uber would tell you in various cycles, at least on the ride side, they didn't necessarily see that type of variability. I just wonder, let's put Uber aside for a second. Let's take Instacart as an example. Groceries. your monthly bill $100 plus. Not many people do it. Like if you and I just started doing it once a month for our staples, that would be huge relative to how many people are using it now in a good or a bad economy. And it saves an hour of your life, and the fees of that are $15 or $20. Right. So at some point there's convenience. And I apologize if this is Wall Street ivory tower, but like when I grew up, everyone, in our neighborhoods cut their own lawn. And now like you go back to those same neighborhoods and no one's cutting their own lawn. Again, I apologize. I realize there's people across this country that cut their lawn. So I'm oversimplifying it. But the point is that there is a high penetration opportunity of people that want time back. And we're willing to spend, $20 to get an hour, or $10 or whatever it is to get an hour of their life back to do something different. That is particularly true post-COVID, right? COVID was a game changer in terms of humans reevaluating their life. And there's countless examples that we've seen with this, across the companies that we cover in various forms. And I think that goes to that. So yeah, of course, if it's tough in economy and my friend jokes about his kid that ordered an Uber Eats burrito and it costs like $35 as opposed to just getting one burrito. Yeah, there's definitely that aspect of it. But the more we get to quality of delivery, and that improves, and I think that's why Instacart does very well in terms of their pickers. But just overall, as the quality, reliability improves, that you're maybe willing to pay something to have a little bit of your life back.
You're missing something there. You missed the big test. And this comes from a friend of mine who owns a lot of QSR restaurants. The packaging test. Can the French fries come to you crispy? That is the big test that he judges every delivery. Can the food come warm and the French fries crispy? He always orders just French fries just to see the packaging. That's the big test. But if you put that into an autonomous delivery vehicle, economically, you can lower the price. Does that become a big thing there? And I'll say that, and I've said this many times, and I'll say this again, I am not a fan of swerve robotics. I don't know why NVIDIA invested in it. I think it's a horrible investment. The sidewalk bots are not going to work. And it's really interesting when you read their S1 filing, and I'm going to go Walt Rich Brandon world. I read their S1. It said, we have no experience running an autonomous vehicle company. And the risk factor. How do you put that in there when you're filing for an IPO?
Yeah, I mean, look, there's a lot of things that can change in terms of where the food is located relative to the people. There's one that I hope we get to in our weekly podcast here, which is through the air, and how that can change delivery, particularly for products. So I think the question though is on the cost side, and I think over time, we'll see what the recession does, but over time, there would be a willingness to get your life back. But again, to your point, if autonomy increases the probability that I'm going to get that within 7 minutes, and the driver's not going to go to my neighbor's house first and I get the cold fries, or it's going to spill out all in his car, or it's in the back, or whatever it is, delivered to the wrong house, then you have to re-get it. Then all of those things, if you're improving the customer experience, it just makes that person consider even more. Do I want to get in my car and drive to pick this stuff up, or will I, because I know it's reliable, I know it'll get here in 15 minutes, I know the fries will be crispy, that I will just choose this as my option. I think those things all come into play.
The other thing comes into play, you do not have to tip. This country is going through tip fatigue.
There is definitely tip fatigue. The flipping, the flipping of the iPad. Yeah, that's...
You could blame Toast. Toast is the one that really started to usher that in. The Cambridge, Massachusetts company, they started to usher that in. A lot's going to be ushered in.
Tips may be tax-free. Who knows?
Well, we'll find out in January. You never know. But that's January. What do we need to look for in the autonomy markets until we get together next week?
Just that line of rides per week going up. And other companies, providing similar stats, and frankly, just user experiences. More and more you hear, I was in San Francisco and I got in one of the Waymos and it was actually awesome. Freaked me out, or whatever it is. And I think, it takes time. Things happen slow and then they happen really fast, right? So I feel like we're getting to that point almost where, you inflect to really fast. Other issue is like, what's Elon saying in October? And I think let's hold that for future podcasts because there are some weeks in between now and October. Obviously, someone who's overpromised and underdelivered on this particular topic, but by no means should be underestimated in terms of what can be accomplished. And not to jump around here, but like to go back to my kind of legacy and what our firm does, TMT. Do you remember when Elon fired all those people at Twitter and the expectation was Twitter was going to crash the very next day?
It's gotten better.
The recent improvements have obviously been very good. You know, there's other things that are impacting their ability to grow ad revenue, but just speaking to the firing of people relative to the functioning of the product has done well. Tesla, obviously great company. SpaceX, great company. What Starlink is doing is clearly amazing. So yes, he's overpromised. That's what Elon does. But like, you know, as time goes, they do a pretty good job at solving problems that people thought before were unsolvable. And just on that topic, very briefly, this LiDAR seems to be, again, you could educate me, maybe your listeners could educate me, necessary component versus not necessary component. I remember when Elon said, you drive with your eyes, it should happen with your eyes. And I had this random meeting with some Uber engineers, and I was like, this is back when they owned Autonomy. I was like, is Elon full of shit? And they're like, yeah, no, not really. Ultimately, like, you know, that's probably the end game. And now you have Wave, right? Wave using AI to try and potentially eliminate this component, which could change the cost dynamics in some ways. Maybe you don't want to because you want that added safety, but everything's kind of diminishing marginal return and change things. So anyway, that's a long diatribe to kind of queue up hopefully future podcasts where we talk about what Tesla can bring to the market.
We're going to get into it. Neuro's not using LiDAR anymore. I'm going in the Neuro car next week, so we'll talk about that in the following podcast. And I'm going in the Wave car before the end of the year, so I'll be able to give you hands-on experience. And I have to go back to your world, your day job here, TMT world. Elon's doing this at Warner Brothers. Zaslow, as your partner Rich has covered, is in a lot of trouble, the way Warner Brothers has been performing as a public company, to say the least. They're going to announce it on the Tesla backlot. Is this an only in Hollywood moment? And I ask that because we've had data now that they're mapping around the Warner Brothers studio in Burbank. Any insight into that? Is it just space, or is there something bigger going on here?
I think Zaz would love. This is like when Mike Sievert from T-Mobile, CEO of T-Mobile, got up on stage with Elon to announce the ability to do texting over Elon's satellites to your T-Mobile phone. I'm sure Zaz would love to be associated in some way with the aura that is, you know, while sometimes controversial, largely positive with Elon. So, however, I don't know, Grayson, I have no inside baseball on this, but I'm guessing it's just for the space than it is for David Zaslav to try and pull out a kind of a nice moment for himself with Elon. But we'll see.
We'll see. Now, we'll give you history on this. This is not the first time Warner Brothers has gone into autonomous vehicles. First time was that they had the Batman car. They did that with the BMW X5 with the big screen. It didn't work. It was Pam Allison actually ran that program. And then the other time was I was working with SAE and we were going to do a demo day in the Warner Brothers lot. So Warner Brothers has been thinking about autonomy for a long time. We'll find out August 10th. We'll get into that in other weeks. Until next week, the future is bright. The future is autonomous. The future is user experience. Walt, this is fun. We're going to have a lot of fun here.
Looking forward to next week, Grayson.
Me too.